see
So
a countdown.
Okay.
You're live now. People can hear you.
Okay, good morning, everybody. So we're ready for the countdown. And here we are right at 6850-ish inflection point. The drama builds. And we have unemployment numbers, I believe. There you go. We have unemployment numbers, I believe, coming out now. And it doesn't look like the market is impressed. And let's do a quick recap of yesterday. And I was away from the desk most of the day yesterday. Lots of little appointment things. But as I remember from my note, if I'm looking at the chart, 68.49, so basically where we are, was where we opened up from that 68.35-ish level, which was where we closed on Friday and again on Tuesday. If you remember, Friday and Tuesday, we had these crazy wide ranges and we ended up flat. So Vol failed to realize end of day, even though we had crazy moves. And so yesterday, we opened near 68.50, topped out at 69.10, 69.09 technically, and 78 cents, whatever it was, which happens to be, or maybe doesn't happen to be, right where the 20-day moving average is. So yesterday we went through the 50-day, tickled the 20-day, then ended up closing below the 50-day at 2 o'clock. The Fed minutes came out. Where was that? So we got stuck up here near the 6,900. And once, at around noonish, once we couldn't stay there. We had a lot of sticky sold calls up in that area. We slowly started to drift down. Then 2 o'clock, the Fed minutes came out. The market, see right here. The Fed minutes came out. The market tried to decide what they thought of it. As you notice, we're at that 68.90 level, the 50-day moving average, right in the orbit of the 6,900. And then they didn't like it. Vol picked up. We went down almost to the low of the day, 68.55. And then storm kicked in at the end of the day. We won't go into all of that. And we closed at 80. And now here we are back down at 68.50, round number. A lot of confluence throughout the chain at those round numbers, especially for the AM expiries. That's where the institutions like to play. And so those are our big landmarks for today. The other landmark for today, and we'll talk about it in a minute, like I mentioned, is that 68.35.30, bottom of the chop zone. And we'll talk about why that is. I forgot I didn't do my job. You're supposed to like, subscribe, and comment, especially you folks on Twitter. Please like, retweet, comment, do something. If you think this is useful, which you probably do because you're watching it, and other people might find it useful too. So if you like, retweet, comment, you're carrying the message. Okay, thanks. Enough of that. I don't like doing that bullshit. I'll tell you the truth. So anyway, back to what's going on here. Let's talk about the volatility space again. Seems like I got dragged into volatility over the last couple of years, whether I like to or not. And it's very useful to know. So right here we see VIX at 20.4 and VIX futures at 20.6, basically flat. So we have to call bullshit on that. VIX futures should be 2 points higher, 1.5 points higher, 2.5, 1. So VIX is mechanically too high right now. It's not a great measure anyway, because what's it measuring? It's measuring the tranche of options 30 days from now, et cetera, et cetera. And so bid-ask spreads and the pre-market and all that are just kind of inaccurate, et cetera. Okay, so that's what's going on here. So what happened yesterday? Let's talk about VIX-free really quickly. I did a note on it on Twitter and everywhere. So we had VIX-free. The day before, we were talking about it, that VIX was going to close a little above 20, which is right where it closed. There was a lot of trading in the VIX 1 DTEs that day, right around 2022. Call spreads, flies, whatever. I did 1, 2. They made a little money. I did it more for science, and to teach people. The SOQ, the opening quote, I think was 20 points. I think it was just a tad above 20, right where we expected it to be. And then it kind of went down to 18 throughout the day. We unclenched again, as we would expect, and then kind of went back up toward 19, wherever it was at the end of the day. Now we're having this again. Initial claims, whatever, I don't care. Whatever the market tells me is what I care about. Imported goods, all this stuff. All right, I'm looking at my E-mini chart up there, and it's basically treading water. Okay, so now the unknown becomes known. A little vol should come out of the chain, and it is, but okay, so we'll see. I'm still expecting VIX to unclench today and tomorrow. However, when I say VIX, I'm really saying volatility broadly. The VIX 9-day is interesting. We were talking about it before the broadcast. And let me switch gears. Hopefully you guys can follow me. My thinking kind of diverges and then reconverges, Quantuition style. And so while we're looking here, let's kind of look at the VIX 9-day. The VIX 9-day is 19. That's pretty high. That's 1.4-ish% daily move, whatever. That's pretty high. So I asked myself, and we were talking about it, gee, why is it so high for next week? We know that tomorrow, I think we know that tomorrow we have PCE, the Fed's preferred measure of inflation. I think a law was passed that whenever you write PCE in financial press, you have to say the Fed's preferred measure of inflation. Otherwise, you go to prison. I think I saw that law. And so I don't want to go to jail. So that's the Fed's preferred measure of inflation. That was a joke. Well, cue up the laugh track. And we also have, in theory, the Supreme Court verdict, the tariff verdict, whatever. Now, I don't know, the poly market, whatever it is, all that stuff, and the legal scholars, whatever they're worth, say it's pretty much 25% chance that it doesn't get reversed, or 75, 80% chance that a bunch of tariffs get reversed. I think we already know it. Vol is still priced in. And so we'll see how the market decides to react. And then you have to turn to your macro bro section to see what the dollar does, rates and all that, because the narrative, and again, the narrative, I don't know if this has anything to do with reality. The narrative is that the tariffs bring in money. And we saw actually the deficit went down. The tariffs brought in money, the deficit went down, et cetera, et cetera. I have a piece I wrote up about that I was going to post last night. Didn't have time. I'll post it over the weekend. And so the market likes the tariffs revenue, but doesn't like the inflation from tariffs. And so it's going to be a macro bro dance between which is better, which is worse, and how it shakes out. The answer is nobody knows. Between you and me, nobody knows. I've been watching this stuff for a long time, and they're like predictions basically are pretty much always wrong. Too much of a web of connectivity, too many moving parts. But anyway, so that's what's going on. Let's get focused. Us meaning me. Okay, so 2 o'clock, we talked about that. Oh, let's talk about the the VIX decomposition index, which if you guys have been watching, you know I've been kind of using this. You could go to cboe.com, VIX decomposition. I'll show you the link in a minute, and you could look at it yourself. And basically, long story short, what's this telling us? That most of this was sticky strike shift. We just moved to a different neighborhood. We went from the restaurant that charges $15 for a burger to the restaurant that charges $12 to a burger, but the price of meat didn't change. The parallel shift didn't change. And so let's see how I elegantly phrased it in my daily plan. Okay. So we dipped to 18.5. Okay. VIX decomposition red matched up. Mostly sticky strike mechanics, vol spot up, vol down. Not a broad parallel shift reset. Put skew rising a little bit. So they're still buying wings. If you remember the other chart I showed you to the lower left was tailed X. So you're supposed to look at a lot of things at the same time. And so they were buying tails. They were buying tails over here. Okay, so that's all. You see all that here. And this is in the note that you subscribe to my Substack, you get. That's above the paywall. Like, subscribe. I'm probably supposed to have some kind of CTA, they call it, call to action in the marketing world. I'm learning all these terms. Okay, so what else? Again, just to restate the obvious, yesterday Qs were up, the diamonds were firm, IGB and SMH was up. And so we rotated out of the rotation into a new rotation. We're probably going to rotate back. QILD, you guys know I talk about the QILD roll. What's QILD roll? What's he talking about? I'll tell you. So QILD is the yield max family of funds that sells at the money, oversimplified, at the money calls, the NDX on, let's just call it QQQ. And it gives you income. It gives you around, well, they call it income, not really, gives you around 10, 12% a year. And although they do it on the Russell, the IWM, which is the RYLD, XYLD on the SPX, for whatever reason, in their infinite wisdom, they buy back the calls they sold on NDX, not any of the other ones. And so they have to buy back around 4,000 NDX calls today. However, those calls were sold a month ago when we were basically near all-time highs. They're about 2% out of the money. They're about 1 delta. I mean, a 0.01 delta or 1 delta, whatever. So basically, they don't matter. So I'm just mentioning it for those of you that follow that, and I get people to ask me about that. Today, it's a nothing burger. Tomorrow, it won't be, because it'll be at the money selling. I'll talk about that tomorrow. Okay, so we had all this stuff. We have consumer confidence at 10. I suppose that might matter. I don't know. And then, okay. So expected move when I looked at it this morning was 68.05, 69.05. The moving averages, which I like to watch. I watch the simple moving averages. I'm a simple man. 68, 90, 95-ish. I draw my lines with the magic marker. And 69.10, 69.15. And now we're going to talk about the main zones. And the paid subscribers get like the level by level trading plan. And I got to say, I don't scalp them, but people do. I got people making a lot of money scalping my levels a lot more than me. And, maybe one day I'm going to talk about that. But I'm not going to do that right now. So these are the three structures, and now we're going to switch gears and talk about that. And for that, we go to what I use for my daily plan. I mostly use options depth. Do we have an affiliate link in the Substack and in the YouTube?
In the YouTube description, we do for options depth and mentor Q. Always.
Okay. I'm not sure if I have one in my Twitter Linktree thing. I'll look, but that's a story for another time. So anyway, if you're interested in subscribing, click and all that. So basically, the chop zone is 68.30 to 68.80. Let's call it the recent close area, Friday, Tuesday. So we have PA confluence with what's going on here. So these are sold options. So this whole 68.30 to 68.80 is noise. This is all noise. They bought options, they sold options, it spreads, whatever, this is noise. And then over 68.80-ish, where we closed, we kind of have room to travel toward that 20-day moving average. Coincidence of all coincidences. Below 68.30, below that 30-35, that recent level, some kind of selling, but thin supporters, but I wouldn't get excited about it. That's kind of what we see. Let's take a look at one more thing. I was looking at this pre-market. I was talking with Nanda, who does some of the admin stuff. And if we just add into the story, take today, take the AM expiration and the PM expiration, and we add it into the story. And we don't want to necessarily look at position size. Why not? Because let's just say hypothetically, 1,000, 6,800 puts tomorrow versus 1,000 today have a different required hedging response because of gamma, as we remember, is time dependent. So the stuff today matters more than the stuff for tomorrow. But if we switch it from position number to gamma, boom, now we see the relative influence of those as of right now. And so what does that tell us? It tells us kind of the same story, but below 68.30, kind of choppy, and then below 6,800, not looking pretty, down to 68.65, 68.50, all that. That's going to change with movement of spot. These bars will get bigger as we move down, etc. If you want to understand that, we talk about that all day long on in the Discord where I share my screen and talk about it. And people ask questions, people make comments. A lot of knowledgeable people that subscribe. And so that's kind of where we are. Oh yeah, I wanted to show you one more thing. So we were talking about, I'm coming back around to the VIX 9-day. You thought I forgot. I'm coming back around to the VIX 9-day. So VIX 9-day is basically fast forward 9 days from now, and then take the SPX options expiration before 9 days, which is tomorrow, the big AM, and after 9 days, which is next Friday. So it's this Friday and next Friday. And I was looking, and next Friday, we have a 19 vol. That's pretty high. And we see it kind of marching up during the week. No fancy quant stuff here. 15 on Monday, the usual Monday low vol for your calendar gurus. 16, 17, 18, 19. What the hell's going on here? NVIDIA's going on here. Chewy mentioned that's Bad Hombre's real name. That's his actually nickname, it's not a real name. That's where NVIDIA is. I'm not sure the exact date, but we have NVIDIA looming large, and I don't have to tell you why NVIDIA is important. If you don't know that, then see me later for, well, I'm just kidding. Okay, so that's what's keeping us in this high volatility, sticky mess. Oh, the 26th, thank you. Okay, so it's the day before, and so people are parked in the Friday, but we see the day before is 18 vol, so we have 150 point-ish expected move. I'm not crazy about their expected move calculation method, but good enough. We'll call it 150 points. So 150 points from here is 6,700 bottom. 150 points from here is 6,850. Is 7,000 top. Same numbers that we've been looking at kind of all along when we're looking at quite a time frame. That's what's going on there in the VIX 9-day. Speaking of expected moves, so here's the week-to-week expected move as marked on my chart by magic by some indicator that I have. And look at this. Here was the bottom of the expected move for this week. We stayed within it. We stayed within the top. Last week, we undercut the bottom of the expected move, but we closed above it. The week before, that crappy week where we broke down to 67.80, we undercut it and closed within it. Does that mean we have to? No, but we tend to. Somehow there's some, the whole market structure thing matters. That's why we use gamma. That's why I talk about this stuff. That's the edge on top of whatever your TA is. I mean, clearly you don't have to be a genius to see which levels, look left and you see where the levels are. Or look at your RSIs or Fibonacci's or whatever you like to look at. And this just gives us more granularity as to what's going on and why. Okay, I think, one last thing and then I'm going to turn the mic over. Let's take a look at what's going on in VIX. So now this is the VIX position numbers. I don't want to see the upcoming expiration for next week because that doesn't matter. We want to see where's the monthly, I think. Is this the monthly? What's the monthly expiration for VIX? The monthly expiration for VIX is the 18th, okay. Oh, and I put this trade on as a teaching tool for people. This trade was put on while VIX was around 16, 17. People were saying VIX is too cheap. They said, let's buy the 20-25 call debit spread. And I said, no, that's the wrong way to do it. So if you bought the 20, you're losing money. If you sold the 25, you're losing money. No, you're making money. You're making a little money. But the money was made by buying the 15 and selling the 20. And if you do a ratio spread where you sell two of them, whatever. But anyway, so that's the 18th. What toss indicator to get those lines? I got that from TheoTrade. TheoTrade has it on their website. It's like a custom indicator or whatever. Remind me, and I'll put it in. I'll put it in the YouTube resources section if we have one. Sure, if you can remember to remind me, I'll figure out how to copy it and put it in there.
Okay.
And so I like that. So anyway, so this was all a long-winded way of getting me to the expiry, which is the 18th. And so did I pick the right one here? Specific, yeah, the 18th, okay. So here's what we have for the 18th. And why am I looking at this? Because just like we had that nasty hedging last week between 18 and 2022, where customers were long calls, market maker was short gamma. This time, where do we have it? 18.5 to 21, same range, with 20 being where all the calls are parked. 20 is where all the calls are parked. So if we switch from market makers to customers, sometimes it's easier for people to think about it this way. And I guess go from net to calls. Here's what people are long options. They're long lots of the 20 calls. So as we go up, market makers hedge to that. But remember, as we go away, they decay. Now, these are marked, so they don't have a lot of influence. But notice over 20, there's a lot of sold options. This is basically a fly. Longer 20, shorter 22, 22 and a half, longer 24, whatever. 20, 22, 24 fly. Or 20, 22 and a half, 25 fly. That's what basically the structure is telling us. That's basically what the structure is telling us. Okay. So now that I've kind of maybe bored some of you to tears, we're going to switch, and I'm going to take a deep breath and let Julie put a chart up and just show you some simple level of lines. Go ahead, Julie.
All right. Pull that up for you guys. All right, excellent, guys. So let's talk about our range first. My range is going to be from 69.12 all the way down to where we are now, 68.60. Pretty big range. We have a pivot at 68.80, which are currently holding below. We rejected at between my 68.90 and 68.80. Pretty decent rejection down to our floor. Okay, how do I trade this? What am I looking for? I'm looking for, let me get this right. Yeah, I'm looking for a push up here, which we're kind of already getting. I want to see price open in this area and hold this area without pushing up.
What number is that?
890 to 880.
Okay.
If we hold this, primarily 880, I'm looking for more downside here. I think the next downside level that is very attractive to me is going to be 68.55. So around this area right here. Nice clean, what is that? Nice 30-point move down. I'll be happy with that. That's my plan A. I always hold runners just in case we move all the way down. I got 67.90 here. Maybe, I don't know if we'll get it, but I am downside. I am more downside leaning today, obviously, if you could pick that up. But let's get the plan B in order. If we can't get downside momentum and we hold the upside pivot, I think we can climb all the way to 69.12, maybe 69.20, overshoot a little bit, back down to 68.90. So I'll be kind of trading the edges of the ranges downside. Downside, and then below the range, I'll be trading a breakout to the downside.
As you're talking, I was trying to figure out how to share that indicator, and I'll figure it out. I know there's an easy way to do it. What I will do is I think I could do something. No, I don't even know how to do it.
So if you're new to the group or new to the calls, I highly recommend kind of comparing my chart beginning and after the session. I think it could be a pretty good tool for your tool belt throughout the day.
Okay, so here's what we're doing. I'm going to try to do it. I don't know if it's going to work. Okay. This is going to take you to all right, since I got myself into this mess here. Okay. What I did, I just shared this workspace, whatever it is. Now notice this workspace is a 6-panel workspace with a lot of crap that I don't use. This has got stuff, the other 6 panels are stuff from 3 years ago, a lot of which I don't use, the other 5 panels. However, since I'm not very technologically proficient and I have one of the 6 panels the way I want it, that's what I use. I'm sure there's a more elegant way to do it, but that's not me. And so when you get to this workspace, the mess that you're looking for is this. Theo, no writing, expected move, blah, blah, blah. And I have different labels turned on and off. Otherwise, it's just a big mess of labels. And so you can play with it. It's in there. Click that. And there's plenty of people in the Discord that can actually tell me how to find that indicator and share it. And I think it's on Theo Trade's website. It's pretty sure it's in that free indicator section. I haven't looked at their website in years, but that's where I stumbled across it years ago, and I like it. Okay, so that's that. Okay, it's 9 o'clock and we're basically done. Let's revisit. Okay, so here's the ES chart. And we're kind of at that 68, we're at that kind of flip inflection point. Call it what you want. Kind of where we are. That's kind of where we are. Let's get back to SPX. Do a quick check. And so we're at that 55 level, which is basically yesterday's end of day low before the bounce back up to 80, end of day low over here before the bounce back up to 80. So if you want to play your TA tight, that's obviously a level you look at, 68.50 round number. So again, not rocket science. And that's basically it. I wanted to look at Amazon. If you guys want to indulge me. And this is somebody else's stuff. I give him a shout out sometime. Kill Pips, DiFilippo, whatever. I'll retweet him and give him a shout out. But basically, if we look at Amazon, I'm bullish Amazon here. Not that it matters. I added shares. I might have some Amazon forever. That's not what we're talking about. I added trading shares yesterday and the day before in this 200-ish area. So I just kind of wanted to show the chart. And so here's today's range. That 200 is obviously the round number thing. We had a decent move yesterday, and now we're just kind of seeing how that resolves. And again, if you guys have been listening to me, I'm not shy of saying that I follow Z Contrarian. I made a lot of money on the Zim thing. I got it at 15. It's now 28. I followed him on this one, up 50%. I followed. That's it. I don't have to be proud. And so on the 17th, he took a new position, 19.5% portfolio allocation in Amazon. That's worth buying some shares, if you ask me. Maybe I'm wrong. So I bought some shares and I sold a 160 January put, I think it was. Got about 150, got about $9. So if they give it to me at 160, 150 minus $10, 140, I'll own it. Obviously, you need to have the 14,000 or whatever it is per 100 shares to do that. So I'm just telling you what I did, not investment advice. We're just talking to a bunch of traders. And he had an allocation to Uber. I have Uber from real cheap during the pandemic. I loaded up on crap during the pandemic. And yeah, he likes Bill Ackman. Bill Ackman is a concentrated position guy, and so is he. So anyway, enough of me talking about Z Contrarian. Follow him. I'm just going to retweet him in case people are watching. If, now you can see how nice, how good I type. If you're okay, there you go. I'm not going to fix the typos so I can impress you guys. Okay, that's it. And that's basically it. I think I'm done. See you guys later. Safe trading. And here's the server where I have the decomposition index, where I give a more detailed explanation of it. And here's the straddles. Here's where I explain the reasoning behind that VIX spread. You know, so there's a lot more stuff in there. I can't put everything in my note to talk about everything. VIX pre-disconnect, that one I put out here. So every day I do some detailed thing about this, about the VIX decomp index or whatever stuff there is. So anyway, that's it. Oh yeah. I think it's on the website now. Let's see.
The beta is not on our website.
Oh, the beta is not on the website. But no. So tell them what it is. And tell them where the beta is.
The beta's in the description. It's the. Sorry, I'm actually not in a good position to talk about it right now. I'm just doing something. Okay. So if you could do that, Brian. Sorry.
Okay.
Or sorry.
So enroll in Doc's Accelerator. So I have a mentorship course, you can call it, that goes through, I think it's 9 modules or 12 modules that goes through everything from what's a delta, what's an option, to gamma, charm, all that, how to trade it, trade structures, condors, flags, management, etc., etc. I believe we have the course outline in the description link there, and we'll tighten up whatever. And so what we're doing is, right now it's a beta. There's typos in it. There's stuff that's kind of backwards. I don't have the video going with it. And so what we're doing is we are offering a beta that's only $4.99 for paid subscribers. And I think we're offering $9.99 if you're not a subscriber, if you want to subscribe to Options Gelt for the year and get the accelerator course, only $9.99. That's the price usually for a year of my Options Gelt. Only opened up to 10 people. I don't need a big circus in the beta. And what we're going to do in the beta is I'm going to put the modules up. You guys are going to read it hopefully beforehand. We're going to talk about it. And so we're going to record some of those video clips, plus I'll record other stuff. And that'll eventually get together into the course with corrections made for V1, V2, which will then be priced higher, right? Will then be priced higher. And so that's what we're offering now. And I'll get the links out for that, or Chewy will get the links out. We'll get them out on Twitter. We'll get them out on YouTube. They're in the description, I'm told. And so that's what's going on. And that's it. Okay, everybody, take care. Thank you.